we are going to start now. Thank you to everybody to be there for this conference about trends and innovation in climate risk management of the sustainability and regulation community of Chorus. In the sustainability and regulation community, we just share experiences and last updates about regulation. And today we will present you some experiences which will be introduced by Adlène Boucher-Nafa. Adlène is partner in TNP in charge of sustainability. He's got a very rich background in corporate investment banking, asset management. He even spent some time with the French regulator AMF, and then joined the consulting business. He support his client on compliance matters, organization matters, and IP reorganization. So Adlène, I let you introduce the subject for today. You're on mute. You're on mute, Adlène. Adlène, you're still on mute. Can you hear me? Yes?
It's okay.
Great.
It's okay. Some trouble with my connection this morning.
Okay.
But it's okay now. Thank you, Clotilde, for this introduction. I'm very happy to be with you today for this very interesting session on the latest trend in climate risk, climate change management. Very happy to be with you and to have the opportunity to exchange with you on this topic. We'll have a very interesting session today with different speakers here to share with you their insight and share the experience, very intense experience on the climate risk management. And we will also have a panel discussion to deep dive on this topic, and we hope that you will at the end of this session have a lot of let's say a lot of materials, you know, to be used for your, let's say, day-to-day business, and to use it in better managing the climate risk management. But if it's okay for you, let's try to start with some thought on my side, just to briefly introduce the topic, because climate risk management is a key challenge for all financial institutions. Has the impact of climate change pose significant threats to their financial stability and reputation. We know that financial institutions need to adapt and to adopt proactive and very comprehensive approaches to assess, disclose, and mitigate their exposure to climate-related risk, such as physical risk from extreme weather events, transition risk from the shift to a low carbon economy. And we often forget liability risk from potential litigation or regulation. And we have, unfortunately, already some cases with financial institutions. Some of the latest trend in climate risk management in the financial institution could include, for example, integrating climate scenarios into stress testing and capital planning. Financial institution can use scenario analysis to evaluate how different climate pathway could affect their assets, liability, revenue, and cost under various assumptions, and obviously time horizons. This can very help them to identify potential vulnerabilities and also opportunities, as well inform their strategic decision and capital allocation. For example, some banks have used the NGFS scenarios to assess the resilience to different climate outcomes and policy response. But I will go deeper because Mark will share some thoughts on this topic. Other trends in climate risk management, enhancing climate-related disclosure and reportings. Financial institutions, through notably regulatory pressure, can improve their transparency and accountability by disclosing their climate risk exposure and management practices in line with international standards and frameworks such as TCFD recommendation. This can very help them communicate their climate risk profile and performance to their stakeholders as well, because it's always a commercial benefits, and attract investors and customers who value sustainability in their decision making. For example, some banks have published their TCFD aligned reports on their website or in their annual reports. Other very robust trends, developing innovative products and services that support the transition to a low carbon economy. Banks and insurance, financial institutions in general can leverage the expertise and resources to offer financial solutions that enable their clients and community to reduce their greenhouse gas emission, adapt to the effect of climate change. This can include, for example, green loans, bonds, mortgage insurance, advisory, and investment services. For example, we have some clients that have launched green finance platform or hubs that provide tailored products and services to green sector and projects. Other trends to share with you today, and I know that Maxime will have some words on this topic. Collaborating with regulators, peers, and other stakeholders to advance the climate agenda. Financial institutions can engage with the regulators, policymakers, to advocate for a clear and consistent rules and incentive that support the alignment of the financial sector with the goals of, for example, the Paris Agreement. They can also partner with other financial institutions, industry associations, civil society, organization, and academia to share best practices, data and insight, and try to promote, let's say, collective action on climate issue. For example, some banks have joined a very interesting initiative, such as the Principle for Responsible Banking or the Net Zero Banking Alliance, that commit them to align their business strategy with the let's say the Paris Agreement. This is some examples, some of very interesting trends in the climate risk management, and obviously we will go deeper of this different topic in our discussion today. But just before letting the floor to our panelists, Clotilde, can you share with us what is the situation on the French market and your view on the topic?
Well, on the French market, the subject is, of course, on the top of the agenda. ChatGPT introduced, I would say, perhaps not a game changer, but it is perceived as such with AI, and opens some ways of on data management, which is key in climate risk management. So today there is a lot of excitement, I would say, and interest in artificial intelligence to help to monitor, to improve data, and also to lower the cost of data, because today data is not free. I think this is the point. Last year we were more on understanding regulation, the implication of regulation, the organization, and this year it's more on implementation and finding very operational solutions. But I think that Maxime and Marc will certainly share with us their experience in that matter.
Thank you, Clotilde. That's correct. And we have also observed it on the market. The level of maturity in handling the climate risk management is really rising, and it's good news because we have this regulatory pressure. We have also the commercial pressure because the clients are now very mature on the expectation regarding their products and the risk. Supported by the financial institution. Thank you, Clotilde, for this very interesting exchange. Let's jump now.
Yes? Just one word about the survey. We will introduce later during this this conference. So we will share with you a survey, but later during the conference. So that's all, Madeleine.
Thank you. Very important precision. Thank you, Clotilde. Let's jump now to our speaker's presentation, and let's start with Marc. Marc Urubete-Gayona is a head of stress testing at BNP Paribas. Marc is a member of the Group Risk Executive Committee of BNPP. And in his current role, he is responsible for the global stress testing and financial simulation platform of BNPP, shared between risk and finance and the ILMTH Treasury Group function. Marc, the floor is yours.
Thank you, Madeleine. I will share a few words on climate stress testing, which is still a fast evolving environment. On the first slide, I recall that supervisors and regulators are pushing for advanced practices within banks and in insurance companies on climate stress testing because we have already a strong asset used in past crises, which is macro risk stress testing, which is widely spread around the world and has demonstrated its ability to gather consistent data and to be able to run shared scenarios between various regions of the world and communicate to the market clear messages. So the idea of climate stress testing is to leverage that platform. I don't know if the slides can move. I don't have, yeah. So that's the first slide. So showing in the center this traditional macroeconomic stress testing platform with at the top the key variables that are used in macro risk scenarios, and at the bottom the consequences we assess on the bank, but it's also exactly the same that is done for insurance companies. Donc understanding the key financial risks to which the institutions are exposed, and assessing how a shock on macro risk variables is transforming these financial risks for the institutions. Climate stress testing, it's adding to these macro risk variables new risk factors. You have on the left some examples of acute recent physical risk events, and so to a macro risk shock, we can assume that there could be some acute events in the upcoming quarters or years. And on the right, you have more transition risk factors, which are linked to the will to abate the emissions of carbon and other greenhouse gas emissions with political decisions that could go through the pricing of carbon. And depending, as you have on the right left, depending on the right bottom of the slide, depending on the pace of introduction of these carbon prices and the consistency of these carbon prices throughout the world, you can have very strong or limited shocks on the economy for the enterprises to adapt to this change. And so that's additional risk factors combined with macro and physical risk events that can together constitute global climate and macro risk scenarios, and on which we can run stress testing platforms. So that's what is being worked on. We had recently in France an ECPR exercise in 2020 and early 2021. ECB has run also a full bottom-up climate scenario exercise in 2022, which has been quite successful. This year, it's more US, the Fed, that is running the same type of exercise with large US banks. And in UK, the PRA has also run its exercise. And in APAC, we see many supervisors that are either framing or have already launched some guidelines on climate stress testing. We have notably HKMA, so the Hong Kong supervisor that will run its exercise starting end of this year, notably over the first part of 2024. If we go on the next slide, we state that even if we have a solid basis with macroeconomic stress testing, we have a lot to do to extend that to climate risk factors. We have notably data gaps. So I think on that, it will be discussed in the panel. Obviously, we need a lot of new data that were not necessary with traditional macro risk analysis, both on physical and on transition risk factors. And today, we have some heterogeneous sources of data with often a wide range of possible values when we look cautiously at the information on either our clients, corporates, or on our clients, individuals. So there's a lot to do in terms of data gathering, but also enhancement of the data quality. Another big challenge is on the scenario design. Having a scenario that are fit for purpose in terms of modeling is very demanding. You need to expand the scenarios at the right level of information to run the models. And on that, we have notably the network for greening the financial system that is involved in that, and they will deliver this month a new version of their climate scenarios that we expect to be more detailed with more information on how in the various scenarios the transition is effectively done in terms of energy mix evolution, in terms of investment of the various sectors, and also better describing the interrelation you have between physical risk factors and transition risk factors. Another challenge on the design of scenarios is on keeping scenarios severe, because you want to understand how the system reacts to a shock, but that are also plausible. And there you notably have the matter of the horizon of analysis, given that this climate transition has immediate consequences, but also some long-term pattern. It's important depending on the use cases you target, and whether you want to do some strategic thinking or whether you want to assess what could occur on the next plan of a financial institution or over the next 10 years for a region. But you need to adapt the horizon at which you are designing your scenarios and build scenarios that are effectively plausible on these horizons. And today, with the network for greening the financial system, we have long-term scenarios that exist. Short-term, meaningful scenarios are still to be designed, and we will have once again in this June delivery this year probably a first version of short-term scenarios, and we will assess whether NGFS achieved to keep plausible scenarios for this short-term horizon. Obviously, there's a lot of challenge on modeling to capture these new risks, and that notably around physical risk factors, where for banks, notably, it's something new in terms of risk analysis, and so there's probably a lot to do around working closer between insurance, reinsurance companies, and banks on that. To have relevant modeling on that front. Resources are human resources, notably, are key. It's true that all that went quite fast, and so we need to train notably quantitative profiles for the modeling on these new challenges. And so there's a lot that already exists in terms of trainings, but it's something on which we need to keep the pace, knowing that obviously today we talk about climate, but at the same time we have other dimensions such as environmental risks that also interact with climate, and that can be quite wide in terms of knowledge acquisition to develop among the teams. And maybe a last challenge I wanted to mention today is around the communication for these climate risk assessments that we can run through climate scenarios. We have a wide range of stakeholders with quite heterogeneous knowledge, notably on financial institution risks. And so there is a challenge which is ahead in finding appropriate way of disclosing both the scenarios and the outcomes of the calculations that are run, and also the transparency which is required on effectively the level of modeling which is put in place, and that's something we will be with the various supervisory exercising working on in the upcoming quarters. I will just very quickly conclude because I will run out of time on the last slide, which is explaining the next steps for climate stress testing platforms around 4 key dimensions. So the identification of risks, the design of scenarios, data, I've mentioned it. We need to work on expanding data, but also on sharing some shortcuts around data, because we will not be 100% at the targeted level on a short-term horizon. So we need also to have shortcuts that are shared among the industry to not to create discrepancies just by different shortcuts between the institutions. And in terms of models, we have beyond physical risk modeling I've already mentioned, also some challenges around the dynamic balance sheet matter, which is embarking in the projections of the institutions, the way they will adapt their activity to the various scenarios we are considering. The next deadlines, I've listed them quickly. So local supervisory stress tests that pop up around the world with a matter of keeping global consistency in all that. European Commission Fit 55 plan on which the various supervisors are working on, and institutions will be involved in that next year. And for the banks, the SSM, so our supervisor in Europe, that has set a deadline end of 2024 to have a full-fledged framework on climate and environmental stress testing, which has to be in place at that date. So Madeleine, that's all for me.
Thank you, Mark. Very interesting. Maybe a question on my side, if you may. You use the term platform. You use the term platform. Could you just precise to us what do you mean by platform? It is because the content is very important, the scenarios and the standards, and how to have a clear strategy to put it in the machine. But what is this machine? It is a homemade, let's say, machine developed by your teams at BNP Paribas, or do you have a mix with some software vendors? Could you share some thoughts about this point?
Yeah, it's really an ecosystem with clearly data, with IT solutions that are external solutions, but also a lot of internal coding, and an IT platform to host all these processing and calculations and reporting generation. And then it's also teams around scenario design, scenario expansion, and also all the interaction with our internal and external stakeholders that are a key component of that. So the framework is really this ecosystem of data, IT, and teams that interact on these complex processes that can be stress testing, either macroeconomic, as we used to do, and now with this climate and environmental expansion, which are adding new dimensions.
Okay, thank you, Mark. Very interesting. Now let's switch to the second presentation for our today's session. Let me introduce Maxime Drouillet. Maxime is the head of ESG at Natixis Assurance BPC Group. And Maxime will share with us some thoughts about NZBA framework. Maxime, the floor is yours.
Thank you, Edlen. Just a correction, I'm in charge of the environmental transition of the Group BPC. This was my former title. So I want to focus on NZBA, the Net Zero Banking Alliance, because I think it is one of the flagship that illustrates this title, latest trends and innovation in climate risk management, and this in its various aspects. So if more today than 40% of the assets financed by the banks worldwide are covered by the Net Zero Banking Alliance, the goals of the Alliance are ambitious and very structuring for our industries. First, by the objectives, because it aims to align the portfolio on 11 sectors to a net zero trajectory, and this by monitoring carbon footprint at the horizon of 2030. And the second point is that it aims also, I would say, to define a framework that would create, in which I do believe in, a common level playing field around the same standard. And I think that it is quite essential to be comparable and credible in the future when we take actions and commitment on climate. So the Groupe BPCE joined the initiatives in 2021, and last year we have published our first intermediate targets on the energy sectors. So on power generations, to pass from 156 grams CO2 per kilowatts to less than 138 grams CO2 per kilowatts, according to the net zero scenario of the International Energy Agencies. And we take a commitment that could be as similar on oil and gas, on the end product, on the production, and extraction. And we aim to reduce our absolute carbon emissions by 30% from 2020, between 2020 and 2030. So those commitments sure are ambitious. Before to maybe explain what were the implications for the trades and the business, I think it is important to share what it means when we take commitment. So please, on the next slide, I will, thank you. On the next slide, I will just explain and exhibit the different steps to be achieved for target settings. Each of them, I do believe, illustrates how much NZBA is an operational tools for identification, measurement, and monitoring of climate risk transition. First, the first step, I would say, it is to clarify the scopes, where chain values make sense, which scope of carbon data are materials, what business and financing should be considered. The second is about the methodology. And this is linked for sure about the convergence on standards to be comparable and very credible by peers. The third is about trajectories. And when we talk about trajectories, it is to identify the most carbon intensive clients within their sectors, then to determine their trajectories and their carbon reduction objectives in the years to come, and also to assess the business perspectives and how the portfolio will evolve, considering outlooks of clients, considering geographical factors, technology, and all of those, I would say, factors determine actually what will be the profile of our portfolio at the end of 2030. Then it is to take or to establish an action plan. This in order to, I would say, align our portfolio to a net zero trajectory. So it's about not only reviewing the impact on the business of such trajectories and scenarios, but also to look at action like exclusion policies and to exclude some clients that are the most harmful for environmental perspectives and that do not have enough transition plans to tackle climate issue. The second point is also to look at how we can accelerate the financing of low carbon economy, and therefore to strengthen the dialogue with our clients to make sure that they take into account transition risk in their strategy. I would not mention for sure what is natural now in our banks, which is to today talk about governance, how we have to implement it at all square of the company, from front office to for sure the top management. Mark has said a few words about that, how much regulation and all the I would say the frameworks surrounding climate are more and more intensive concerning our industries. maybe I want to make on the next slide a point on the difference between commitment and monitoring. So I have explained the different steps to target some objectives on climate, but it's not just about action plan. Actually, for our industries, it's also to set up a transition plan. And when I say a transition plan, it's much more about management of data, automatizations, quality check of the data. We do know that it's a core subject concerning ESG, broadly speaking, but also to make sure that we have tools to track the evolutions of the trajectory of our portfolios and clients on climate perspectives. So all of that, the Group BPCE is working on this year to be sure that we have the ability to track our commitment, and this for the energy sectors, tomorrow on the other sectors covered by the NZBA Alliance. If I have to maybe conclude on the perspective of the ambition about net zero portfolios, it's to exhibit what we published in the TCFD on the next slide. That is a dashboard that illustrates that actually, when we talk about climate, it's not just to screen green assets. It's also to be sure that we have the objectives on how to transition about the brown assets. So this is why I have this wish to exhibit the different portfolio and climate metrics that we follow by business lines. This is true on CIB, this is true on the network from retail banks, but this is also true on other industries such as insurance company and asset managers. Maybe I will let some times for questions, but I do believe that the Net Zero Banking Alliance is a strong operational tool to tackle the mitigations of transition risk concerning climate issue.
Thank you, Maxime. I don't know if in the participant we have some question. I have one question, but maybe I let some my other colleagues ask before me. Okay, I start with my question. Mark, how do you let's say qualify the exchange and the level of collaboration with the other banks in this NZBA initiative?
Well, I would say that it's not an easy way, as you can guess. But I want to see a positive insight about that, or to share a positive insight. First, it's the first time that we agreed on some metrics that we have to target, and this on a specific horizon. The second point is that we have this ability to identify the chain value that are prioritized when we want to talk about assessment on climate. And the second point is that we have to have in mind that it's not just a new European ambition, it's worldwide. So when we talk about consensus worldwide, as you can guess, even in Europe, it's not easy. It's less easy when we have to also, I would say, take into account cultural, corporate culture, I think. So what I want just to share is that today, if we look at the different publications, there is not so much discrepancies between what is targeted by the banks and what are the portfolios that are prioritized by our peers.
Okay, good. Thank you. Very interesting. Okay, let's move now to our panel discussion. We have some very interesting exchange there. Gabriel will join us obviously, Mark and Maxime will stay with us, and Gabriel Marochi, Group of Sustainability Officer, advisor to board of Erste Group Austria, will join us in few minutes. Gabriel has a very extensive experience, more than 20 years experience in the banking industry, where he was acting in numerous countries of Central and Eastern Europe. And now his main mission is to increase the impact of Erste Group as a main ambassador of climate action and financial inclusion in the region. Very happy to have Gabriel with us. Maybe the first question to Maxime. How climate risk scenarios affect your company business model and decision-making processes? And can you just share some thoughts about that?
Yeah, sure. Just to be in the continuity of what I have mentioned on the NZBA, I can give you a concrete example about the impact and the implications of such initiatives in our business model. If you look at, for instance, on the commitment made by the group on oil and gas extraction and production to reduce the absolute carbon emissions by 30% between 2020 and 2030, we have reduced between 2020 and 2022 the absolute carbon emission by more than 20%. So it means that we have in the governance, in the way to make any decisions at financings, take into account the chain value of oil and gas production, and also take into account the different case-by-case projects that were proposed in the pipeline. Saying that, we have decided to reduce between the last for the last 2 years our exposure by more than 50%. So we actually outreach our target by the end of our strategic plan, that was to reduce those exposures by 2024. So this is clear that those kind of frameworks are quite, I would say, requires actually attention from all, I would say, the business of the banks, from the front office to the risk committee, and therefore the top management. So yes, it has implications also on organizations, which means that in the CIB perspectives, we do prioritize over kind of financings to make sure that the transitions on projects that are for some kind innovate, I would say close to innovations, were considered by the CIB activities. So it's I would say we should see transition as a whole, as the real economy and our role, vital role on such subject, but also as a whole for our organizations, from the body governance to the I would say the trades.
Okay, thank you.
Hélène, can I ask a question?
Please go ahead.
Maxime? Yes. So thank you to share with us the deliveries against the targets. I've got a question regarding the way you reach this target, because one purpose of banks is also to support the transition of high carbon emission industries. So how do you reach this target? How do you combine this commitment on reducing CO2 emissions and support the brown economy in its transition?
Sure. Thank you, Claudie, for this question. I would be more specific about the transition plan when we talk about that, and what we consider when we look at the outlook of clients concerning their strategic plan in the development of such a consideration, climate consideration. I will take the same example on oil and gas production just to be sure to be well understood. We have decided, for instance, to not continue to finance some national oil company because they do not have any transparency or climate action in their strategic plan. But it's not true on all clients. Some take into account the mix between gas and oil, for instance, and therefore the necessity also to have a lower, I would say, emission when we talk about a sector that is one of the most carbon intensive from the world. So I give you this example, but I can obviously multiply the way that we assess the climate and the commitment that we have taken. This is also true on the power generation when we look at the different mix, and therefore the carbon footprint is just the representation of that and how they will reduce it in the time. And what is important is the trajectory. This is why I want really to insist it. Net Zero Banking Alliance has a forward-looking approach. And we have to have the same philosophy when we look at the clients. We should look at their perspectives, the outlooks, how they are transparent about their reductions on carbon footprint.
Thank you.
Thank you, Maxime. Gabriel, yes, please. You have a question?
Yes, thank you very much. I just wanted to underline what Maxime said, and I think a selective approach is very important at this phase, because there are definitely those players, even in the brown economy, which do have the intention to transition. And those ones already are building forward-looking plans, how to make that transition happen. And then there are those players who are still, opportunistically investing into brown assets. Yeah. And I think, these are the very two clearly separable parts of the clients. And this is also what we are doing in Erste Group. So thank you very much for that narrative. And I can just underline that this is what is happening on the market actually already.
Thank you, Gabriel. Thanks to join us. The next question is for you, if it's okay. How do you evaluate the level of maturity and efficiency of the climate risk framework, both from a regulation perspective and its operational implementation within the financial industry? Okay.
So thank you very much for the invitation and the opportunity to being here. And I think it's a very good topic, to talk about the climate-related risks and the implementation in banking sector, because up to now everybody was focusing on on the opportunities, the transition finance, sustainable finance, green finance. These were topics which were very much up to now kind of pushed and also taken up by the market. But I do believe that the climate-related risks are just approaching so fast that we need to deal with them. And in this, just also looking back for my banking career of 20 years plus in risk management, the bankers tend to be those who think that they do understand the risks and able to manage the risks. But we also see that this is not always the case, and especially what we can see that the bankers are typically able very well to manage those risks, which are the so-called expected losses, which are kind of frequently and predictably recurring losses with the severity and the frequency as such. Now, the climate-related risks are not that type of risks. And this is why I do believe that we need to pay a specific attention to build up the knowledge. Now, what we also see that, this is not anymore a remote type of risk. Especially in France, we can see the droughts. In Italy, we have seen just, a month or 2 months ago, the the pluvial floods. This is now also the case in some way in Spain, but also in the eastern part of Europe where we are operating in Hungary. And therefore, I do believe that you know, we need to understand that the climate-related risks are something which is gradually building up. And mostly, if we are looking into our balance sheets of the banks, we have a rollover period of the assets of something like 5 to 10 years. You know, the corporate assets rather and on a rollover period of 5 years, the mortgages rather on the end of the 10 years. That means that the assets which we do have already in our portfolios as banks, yeah, are already subject of the future climate-related risks, which are, you know, accelerating. And what we can see also in the very recent paper what ECB published in March, I think it was called Climate and Economy, and it builds very much also on the IPCC, the latest IPCC report. We can see that in Europe, what is coming ahead of us is, you know, lower productivity in the cities because of the overheated cities. The droughts caused lower yields in agriculture, but also in other sectors like energy. We have seen it last year as well. And then the pluvial floods-based erosion of, you know, the material wealth. Now, as ECB is explaining it, it will, you know, cause basically a kind of adverse productivity shock on the market, leading, you know, a kind of inflationary pressure on the economy base. And on the bank's balance sheets, ECB also concludes, based on the last year stress testing, that the banks are facing a loss of its assets, something around 3.5% up to 8.5% if we do nothing, right? Now, this is on a horizon, ECB is attaching to that a horizon of 30 years, which means a yearly cost of risk, something like 30 basis points, you know, erosion of the banking assets or losses. And to be honest, this is something which is already, you know, a visible contribution to the bank's cost of risk, running cost of risk. Yeah? So what I would underline out of this paper of the ECB, that what we might expect on the side of the banking assets are mostly, you know, the impacts on the low energy efficient buildings, which will be, you know, first on the arbitrage front, and also typically, you know, the high emission sectors, as we were speaking already about these brown assets, which are moving to the perimeter of the banking sector financing. Yeah. So coming then very just briefly, you know, what kind of the banks can do and should do. Firstly, we should build up the carbon footprint calculation of our financed assets. That's the very essential basis that we do understand what is the transition risk exposure behind our assets, and we can locate then in the portfolio those assets which are, you know, exposed the most. Secondly, and I would underline it, and basically also referring to the previous discussion, which I have had a chance just to listen in shortly, also building up the forward-looking, you know, net zero transition plans, because this is creating then a guidance, which are those assets which are fitting for the future, and which are those assets which do have a severe, you know, deficiency, a lower efficiency or a high emission factor behind. Simply said, what are, you know, those parts of the portfolio which the bank should protect as a kind of golden treasure, and which is that part of the portfolio which I do believe already today would need to move into an intensive care. Yeah, because as I said, what I see that the biggest players already started arbitrage on the assets. Yeah? And then finally, you know, conclude where the banking sector is. And here I would again use just, you know, couple of facts from the ECB status report issued last November. As ECB concludes, most of the banks are already started to deal with the climate-related risks, but that also means that ECB sees 80% of the banks are moving but 10% of the banks are somehow, significantly lagging behind. Over there, ECB already, through the share process, assigned additional capital requirements or downgraded the scores. And I would also underline that ECB still found 60% of the institutions having kind of major gaps in their understanding, framing, and building the climate-related risk management. So 60% is still a large part of the banking market in Europe. And just concluding, what we are doing in Erste Group. So we worked in the last couple of years to build up, as I mentioned, the carbon footprint calculation. Now, in our last non-financial report, we already disclosed forward-looking targets aligned to the Net Zero Banking Alliance guidance and our membership commitments. We build this first set of targets on the real estate sector, which is the biggest part of our portfolio, and also on the energy sector, which means power generation, heat and steam production. We already started, to also integrate these forward-looking interim targets into our underwriting processes and mostly into our business approaches. As I mentioned, we already, working on segregating our portfolio, which are the golden treasures and which are the intensive care cases and what is in between, and how we can address our clients to motivate them for the transitional investments. And then I also need to say that we are working now very intensively on fine-tuning our forward-looking physical risk models, because I do believe that this will be also not just for the banks a very essential piece of information to manage, the long-term risk in the portfolio, but also for our customers mostly to make the right investments, because they are, making an investment into their production facilities for the next 20 years typically. And on that horizon, the physical risks, even in our regions, are going to look completely different. Yeah. So, this is what we are doing. I would encourage you eventually to look up our non-financial report for 2022 of Erste Group. You can see there also very interesting insights, how we are integrated all this risk framework, climate-related risk framework into our motivation, into our business target setting, and into our portfolio steering. So, just rounding up the story, I do see that there is a big hesitation still, at least in the eastern part of the Europe, on the banking sector to deal with the climate risk, but this is coming toward us very fast. And the framework which is provided by ECB is a very good, very concrete, and I do believe it's worth to invest into.
Thank you, Gabriel. Very inspiring, very interesting. Thank you for the sharing. Maybe a question for all of you guys. Gabriel shared with us some first ideas around the business opportunities. Do you see business opportunities and positive outcomes emerging from understanding the impact of climate change on your business, and how your banks or financial institution are moving, to adapt and maybe create new projects, new services to attract market and to convince the investors?
Adrian, let me come on. I see that the questions are not coming, so let me bring a little bit more light on that. So what we do see, and where I was really very, very happy. I thought first that this net zero transition forward-looking interim targets will be a kind of reporting exercise, because it started, from this broad initiative, also framed by the Net Zero Banking Alliance, where we are members of that group of banks. But I was very, very happy to see that our business colleagues very fast understood that if you are building up a knowledge where the market will be in 2025, 2028, 2030, so basically on your asset refinancing horizon, this is a very important piece of information for our business colleagues. Yeah, and this is where they came with the idea. Okay, then let's look into our portfolio. What do we have in? what do we have in the various markets in Poland, in Czech Republic, in Slovakia, Hungary, etc. And I was so happy to see that, you know, after a couple of months, they just screen through their asset base and already build up, you know, these buckets, what I mentioned, the treasures, intensive care, and the transition finance buckets, because all of them has a business opportunity for them. Yeah. So, you know, it sounds like a kind of reporting and theoretical exercise to look into the future. But once you see where the city is going to be built, you are in the best position to invest into the right plot. You know, that's the essence of the story, and our business colleagues has taken this message very, very seriously, and I was happy to see that this is moving ahead.
Okay, thank you, Gabriel. Maybe Maxime, Marc, Clotilde, some thoughts on this question, the business opportunities.
Yes, I will say a few words about that, even if it's quite the beginning when we talk about climate and to link a strategy of alignment to the business in this way. Nonetheless, on the CIB perspectives, we do have make into account a transitional organization when we look at the different expertises that we have developed concerning green business. I can maybe exhibit it by the way that we consider now the deals. We look systematically at new metrics, such as the green weighting factor that has been established now 3 years ago within this bank. And that is a great tool also to structure a dialogue and to strengthen the relation with our clients when we talk about the strategy of their development and therefore the financing. So for sure, it's also to bring solutions on financings, their green business, client by clients, on I would say ad hoc solutions. It's also a way more in the perspective of retail banks to develop such products as the sustainability linked loans. We accompany many clients on their strategies to develop more and more ESG metrics to target their strategy and therefore the financing. And in a view that could be more, I would say, strategic in the sense that we talk about the re-rotation of some portfolios. We have to see each sector by sector. And if I talk, for instance, for the power generations, it is sure that we have reinforced our financings on those that have a trajectory on their carbon reductions. And this is clearly linked with what has said Clotilde concerning how transition can have impact in our policy of financings. So when we talk about opportunity, it's not just about to finance innovation or innovative solutions. It's also to strengthen and to accompany our clients, existing clients, in their strategy. Mm-hmm.
Yes, and then I think that clearly for our clients there is ahead a huge need of capex, and so it will go through banking balance sheets. It will go also through market emissions, and so that's clearly to have that level of transformation for the financial sector. It's a good time to be in and to accompany that transformation.
Yes, perhaps a question in regards with what happens or in regard with the regulation applying in asset management. So two comments. First, some asset managers have been very in advance on environment and climate matters and developed some methodologies. And the European regulation just with the SFDR just defined some funds category with Fund 8 and Fund 9 for those which are the more virtuous in terms of ESG commitments. What we can observe is that some asset managers, as some which were in advance, have some difficulty, in fact, to abandon their own methodology to comply with the new regulation methodology. And the second comment also is that finally the regulation is not so virtuous, and that some investors have methodologies which are more ESG oriented than what is qualified as virtuous by the regulation. So we can see that in the asset management. My question is, do you have this type of debates in the banking sector? Max, notably, BPCE Group has been very in advance on the green ratio internally. So you developed your own methodology. So is it an issue to adapt your methodology to new guidelines, regulatory guidelines, or not, or an advantage?
Well, I would say that the tools that we had developed a few years ago were actually a great help for the adaptation of new metrics. Why? Simply because we do not have to build a dialogue with the different trades or front office or even the top management. They do know what means climate strategy. They do know what it means greens and the different notion or correlation that could exist between the different fields. So it was just to explain I would say, the differences, the adaptation that we have to make, but we do not have to construct and to build a dialogue with a white, I would say, paper. and therefore it was quite actually, we have to remain humble, but quite much more easier, I would say, to take such commitment like NZBA, or even for the green asset ratio perspectives, to adapt our strategy. Nonetheless, it doesn't mean that it's always easy. We have more and more, and I would say that is a virtuous exercise, more and more specific on the hypothesis, on the metrics, on the scope of carbon footprint that we want to monitor. And I do believe that the adaptations were actually a way to be more accurate in the assessment. And this is how the organization, I would say, has lived it.
Thank you for this insight. I don't know, Gabriel or Mark, if you want to share some thoughts about that.
Gabriel raised his hand.
Yes, I was immediately somehow connecting here a couple of points. Firstly, what I see is that we are currently in a kind of change management mode, yeah, but not on an institutional level, but on the level of the whole economy or the whole region or even the whole Europe. And now the point, what we do see is that the large projects, the large clients are in a much better position in this change, in this shift, than the SME sector. And specifically the Central and Eastern European region, this is a region where most of the companies are in some ways suppliers to the big OEMs. Yeah? And in this sense, we see in this region that the awareness, the information availability for the SMEs is far, far beyond what we see on the large companies of type of Volkswagen, Renault, and this kind. Now, the challenge what is coming is, we will start by 2025 very prominently, and then 2027. when, you know, with the CSRD, much more information needed to be collected, processed, and reported by the large companies. And specifically, the large companies will need to describe the alignment of their business model with the 1.5 degrees scenario, right? And they can do it only if they are, you know, receiving this information from their supply chain. So what we see is that the SMEs are going to get under bigger and bigger pressure from their customers, from the banks, and also from the public financing, you know, resources. So this is where we try in some way to build up either tools, some digital tools with which we can motivate and bring closer the climate change, the 1.5 degree to the customers in the SME sector, be it in the construction, be it in the automotive, be it in the other production industries, because we do believe that this is something which will, you know, make a big change for them, for their business model, but mostly for their business, long-term business success. Yeah. I don't know, Maxim or Mark, if you see it very similarly in your region. There might be kind of, you know, different levels of maturities of SME sector in different regions.
Oh, clearly, I share your views on that differentiated speed of adaptation. And that's
Yes, this is clearly a reality, and we can observe it even on the business line. When we talk about CIB, we have data, for instance. When we talk about retail banks that are much more, well, the core business is much more about SMEs in France for the Groupe BPCE. We do know that there is a great pathway to develop even information on such clients.
Mm-hmm. And to connect that to that, you know, just one thing which is constantly in my mind, EBA is preparing this year, at least by the working plan, is preparing, you know, a kind of, they are still leaving open the door whether this will be a kind of green supporting factor or brown penalization factor. But simply said, EBA is preparing a proposal how to reflect in the Pillar 1 capital requirements the climate-related risks. And I do believe that this will be a very important step to see in which direction they are going to go. Because very naturally, you know, that the risk-based approach would say the brown penalization factor is a clear choice. But to be honest, with the brown penalization factor, we are just creating a bigger risk, I do believe. And this is in some way also underlined in the paper of ECB. If we are not building up sufficient green capacities first, before we are focusing to phase out the brown capacities in the economy, we are, you know, just creating a pressure on the energy security, on the energy availability, on the energy pricing, but also on the cost of living of the people, right? So I'm looking forward what will be the proposal of EBA on this front. I don't know what is your thinking, but we would very much welcome the green supporting factor at first. Yeah.
Okay, thank you all for those precision. I maybe last question for Mark, but the other panelists can jump into this question too. How could we ensure a good interaction between climate risk management frameworks and the existing prudential and financial risk framework in order to not build again silos? Not easy one. Huh?
Not an easy one. Yes. I'm not sure I'm the best place to elaborate on this subject, but what I understand is that today you've got some dedicated teams in order to gather data, improve data, define scenarios, and modeling trajectories. Perhaps the more simpler question is, are those teams completely dedicated to climate risk, or are they part of the risk department? And what is interaction between those teams and those projects within the big, I would say, the big production line of risk management?
It's what we observed within our clients, is that we are observing silos between the climate risk, let's say, manager and the other risk manager and the other function involving in this process. I think to financial functions. And we have there a room of improvement to maybe work more in a transversal way to be sure to gather all the information and to tackle the hot topic of data, because data is everywhere in the risk department and in the financial department, in the operations. And it is very important because we know that we have this lack of data on certain teams. It is very important, to work in a more transversal way.
Yes, Gabriel. Yes.
Okay. Thank you. I was just, thinking, because I think that I do believe that this is, one of the most important choices with the implementation project of the climate-related risks, but overall the ESG strategy of the bank. And to be honest, there was a paper 2 years ago, I think, sponsored by ECB and produced by the team of BlackRock, which that time, based on a survey, mapped what type of models, governance models, are built up in the institutions, how to integrate the ESG and the climate-related risks. And there were basically two fundamental model types, governance model types. One was the so-called integrated model, where basically the climate-related risks and the ESG topics are integrated into the existing functions of the bank. And the other was rather a kind of centralized model, having a core climate risk team who is then developing, pioneering, and in some way integrating the climate-related risks in the institution. And be very honest, this is what we see currently, as well as in our region, in between the banks. These two models are prevailing. Now I can tell you the experience from Erste, where we have chosen probably the kind of more difficult and more effortful approach, the integrated model, where we tried, to build up the knowledge across the institution, across the core functions of risk management, business line, finance, and other support units. And I need to say that this approach at the beginning was very slow, because very naturally in this change management, you need to give a chance to the people that they are building up the awareness, they are experimenting out, they are building up their confidence, and then they are adapting the change into their daily processes. But it took us something like 2 years, with a lot of help of a small central unit of 3 to 5 people who were usually kind of making the discovery phase, but then relatively soon handing over the topics into the proper functions, be it on the side of the carbon footprint calculation, net zero target setting, green asset financing, and taxonomy related issues, etc. So these 2 years are necessary that the institution is taking up the topics, are absorbing, but today we have, I do believe, a very good integrated model in which the particular functions of risk management, be it on the side of the steering functions like ICAP related teams, stress testing related teams, underwriting teams, And also the portfolio modeling teams are having now their proper role in framing and building the climate-related risks in the various content topics. Yeah. So that is our experience, and I need to say 2 years very hard work, a lot of kind of exploration, but at the end, I do believe that this is much more powerful model than the centralized one, which we see that other banks are now struggling to somehow decentralize, because the topic of the climate-related risk is a, across the whole organization topic. It's not just a single silo topic, and that is not working too long. Yeah.
Okay. Thank you, Gabriel, and thanks to all our panelists for the discussion. I think we tried to cover the most important trends in the climate risk management, and I hope you enjoyed the exchange and the ideas, and you will use some information and tips in your day-to-day business in strengthening your climate risk management. Just before the wrap up and to hand over to Clotilde, let me just remind and share with you the benchmarking survey project. We are starting with Chorus. We would like to work with you on better understanding organizational models for corporate social responsibility. Donc, we are running an important survey focusing only on organizational models and to try to make emerge best practices. Our aim is to produce an overview, suggestion, and couple of best practice on how market leaders have it right. And we believe your contribution is enormous to reach this goal. At the same time, we trust it could be a wonderful benchmark for your institution. Share your challenges with a global leading financial institution, learn from your competitors, and let's find out together what is working and what isn't. We are planning to have a preliminary data compiled in the beginning of June with interview series and report ready in September. And obviously, we will share with you all the insight and outputs. Kindly fill in the questionnaire, which will take 5-6 minutes maximum of your time, and stay tuned with the updates. Thanks. Clotilde?
Yes, thank you very much, Adlen. Thank you to all our speakers for the thoughts, insights, and share of experiences. This is the last event, Visio event before the summer. We will have a physical event in Milan on the 24th, from the 24th to the 26th of June. And then we will have our next event on the 21st of September with a theme which is the impact of climate change on insurance portfolio, customers, and strategies. So hope to see you in Milan, and for those who won't come to Milan, happy to see you again in September.
Thank you.
Thank you very much. Goodbye.
Bye.
Thank you.
Thank you for the invitation, and goodbye. This was a very nice event.
Thank you.
Thank you very much.
Thank you.